cold it is here in New York City, but I have a lot of viewer questions for you. Before I get to that, I do want to ask you your 30-second bull pitch for Tesla and your 30-second bull pitch for Nvidia, because I know you're very, bullish on both of those names.
Yeah, look, on Tesla, this, in my opinion, is the most important chapter ever for Musk and Tesla, the AI chapter, autonomous and robotics. I think we're talking 2-3 trillion in terms of market cap, best physical AI play besides Nvidia. When it comes to Nvidia, the godfather of AI, there's only one of them, and that's Jensen. Look, demand to supply is 10 to 1 for Nvidia chips. Get the popcorn out, get the watch parties out for next week's earnings, because this, in my opinion, is going to be a $6 trillion market cap in 2026. And again, the bears will continue to yell from hibernation caves. They'll be wrong.
All right, they'll be wrong. You heard it here first. But let's get to some of our social questions. And I want to start with Tesla. One social viewer asks, Tesla seems to be a show me story with investors all in on robo-taxis and automation, but that seems years away. How much patience does it take to be a Tesla shareholder?
It takes a lot of patience. And we've talked about it so much, on Yahoo and on the show, because this is when you have to have the understanding of what Musk and Tesla are trying to do here. They're building out the AI future. Autonomous, they're going to own 80% of the autonomous landscape, in my opinion, over the next decade. Robotics, Optimus, that's what you're playing for. It's less about deliveries. It's more about the AI future. You have to be patient, but it goes back to this, in my opinion, is going to be the most important chapter ever in Tesla's story.
All right, another question from our audience here, Dan. You've compared the AI boom to a party before, and that we're still early on in the night. Do you have any new analogies for where we are in the AI trade right now?
Yeah, so look, it was 9 p.m. in that AI party. It's now 10:30 p.m. But that party goes to 4 a.m. And it's my view where, look, you're going to have glass on the dance floor, DJ stops playing music, but that party is going to continue rage on. The Bulls and the Bears meet up at 6 a.m. at the diner. Bulls had a lot better night than the Bears.
But Dan, my mother always told me nothing good happens after midnight. So how do you know when to leave the party?
Look, and that speaks to my view. It's all, when it comes to AI, it's all about demand, right? 3 million air miles the last 25 years. I'm always on the road trying to understand what demand looks like. I was in Asia for a month. Demand's accelerated 30% over the last 4 or 5 months. So look, I get some on the valuation, but when those call an AI bubble, they're underestimating the scale and scope of this AI revolution. And for the first time in 30 years, the U.S. is ahead of China.
Even after a number of Wall Street firms increased their price targets prior to the chipmaker's upcoming earnings announcement, Nvidia shares remain a focus. Oppenheimer maintained its outperform rating while raising its target for the stock from $225 to $265. Susquehanna reaffirmed its positive attitude and increased its view from $210 to $230. Both companies justified their higher projections by citing consistent data center expansion and robust demand for Nvidia's AI hardware. Despite such optimistic calls, investors appeared wary. Nvidia is one of the top-performing tech companies in the market in 2025, with shares up more than 140% so far this year. Before the findings are released the following week, some traders might be taking profits. As competition in AI processors heats up and valuations stay high, analysts think next week's earnings will be crucial in demonstrating whether Nvidia can sustain its strong growth pace. Jim Cramer said, "I say own Nvidia, don't trade it," highlighting SoftBank's selling of its share in the business. However, we recently found out that SoftBank, a company so wealthy that I believed it could have a significant impact on the AI build-out, had to sell its whole position in Nvidia at a significant profit. Perhaps that money could be used to invest in additional AI. However, if you really believe the AI build-out will continue, then there could be no better investment than Nvidia, which makes the chips that run all the stuff. Therefore, the SoftBank sale bothers me because maybe they need to make large made. They made significant promises to the AI build-out, commitments that are too expensive, and now demand them to ring the register on Nvidia to cover the cost. The issue with Nvidia in China is not a one-sided one. China also prohibits the use of Nvidia and American-made chips, despite the United States' efforts to limit Nvidia chip exports to China in order to prevent the Asian behemoth from obtaining cutting-edge technology. On November 4, the Chinese government urged all data centers that were less than 30% complete to not buy chips from U.S. companies anymore and cancel any pending contracts. However, economists think China's sales might no longer even be significant given the rise in AI spending. Wolf Research previously estimated that Nvidia might bring in as much as $300 billion next year with Blackwell and Rubin chip sales. Despite China losses, this is 20% greater than the firm's earlier expectation. The research group feels $8 in earnings per share in 2026 is achievable, giving the corporation a forward earnings multiple of under 25 at SAO. Vivek Arya of Bank of America also had a similar opinion based on solid AI spending. Investors should focus on the $500 billion in data center orders, which may help the company achieve 70% year-over-year YOY earnings growth, even while China news is taking over headlines. Similar remarks were made by Citi analyst Atif Malik, who noted that the company's projections assume no sales in China, a practice that is becoming more and more prevalent among analysts examining US-based chip makers. Nvidia, a well-known manufacturer of graphics processing units, GPUs for the gaming, cryptocurrency, and artificial intelligence sectors, has its headquarters in Santa Clara, California. The company has a strong basis to play major roles in robots and electric cars in the future and is a global leader in AI, computing, and networking infrastructure. The stock's 29.48% one-year performance compared to the S&P 500 index's 14.4% is not surprising, given its reputation for beating the overall market. This dominance is probably here to stay as the industry leader in AI infrastructure. It doesn't make any sense to compare Nvidia's valuation to the sector average or even its nearest peers. The business is in a completely different class. Comparing the stock to its own 5-year average, though, would be worthwhile. For instance, the stock is currently trading at 58.47x, 22% below the 5-year average, on a future price-earnings basis. A forward price-sales ratio of 20.28x is 15% higher than the 5-year average, which is fair because many investors expect sales to hit new records in the coming years. Although it wouldn't be accurate to describe such a distinctive company as overvalued, the stock is by no means cheap. All eyes on Nvidia's Q3 earnings report. Despite a 5.32% profit surprise, the market did not respond well to Nvidia's fiscal Q2 earnings, which were released on August 27th. In contrast to the average forecast of $46.06 billion, the company's top line came in at $46.74 billion. In contrast to projections of $1 or $1, EPS came in at $1.05. Although the outlook beat Wall Street estimates, investors had priced in even greater results, which prompted a drop in the days that followed. Expect similar thoughts in the upcoming Q3 reports on November 19. Management predicted $54 billion in revenue at the last earnings call, a $7 billion sequential increase. Investments are probably going to rise in the next quarters because the corporation is actively looking to spend its capital for upcoming chances in AI. When Vivek Arya of Bank of America asked a question, management said they were trying to figure out how to sell the H20 chips to China. However, we now know that it may not be of much value to expect anything beneficial on that front. If there is no resolution on the geopolitical front, Jensen Huang may miss out on a $50 billion opportunity in China. On November 19th, we shall learn more about that directly from the man. 40 of the 47 analysts that follow Nvidia stock have given it a strong buy rating. No wonder recent comments coming out of Wall Street is positive. For many, Nvidia is the best AI infrastructure available. The one exception is a single strong sell rating. One cannot help but notice significant upside potential when looking at the target price assigned to the stock, which is unusual for a stock that commentators frequently label as overvalued. The highest goal price of $350 will give investors a healthy 80% gain, while the mean target price of $234 offers 20% upside from the current levels. A significant backlog for its processing chips was recently revealed by Nvidia. The stock isn't overvalued, contrary to some views. Nvidia has been one of the most profitable investments over the previous few years, and 2025 is no different. Despite being somewhat lower than its peak a few weeks ago, the stock is up almost 50% for the year. When we last heard from Nvidia, the stock had risen as a result of some amazing announcements made at its recent GPU Technology Conference, GTC, in Washington, D.C. When Nvidia releases its third quarter fiscal year 2026 earnings on November 19th, it will be the next big announcement from the company. Investors might be thinking about purchasing shares in preparation of Nvidia's earnings announcement because the company's stock has historically performed fairly well after it. I believe that now is a great moment to buy Nvidia stock, and investors should think about acquiring shares before November 19th. I am a long-term investor, so I don't give a damn about how a stock responds to a quarterly earnings report. I'm seeking to uncover firms that have the potential to provide market-beating returns over the long haul, and Nvidia fits that box for me. The industry-leading graphics processing units, GPUs, which form the computational foundation of almost all of the artificial intelligence, AI technology available today, are produced by Nvidia. Since the AI arms race began in 2023, obtaining these devices has been challenging, and this situation will continue to be so in the future. Nvidia revealed during its GTC event in Washington, D.C., that it had received orders totaling $500 billion for its high-end products, with a significant portion of those orders expected to be fulfilled over the course of the next 5 quarters. For comparison, Nvidia made $165 billion in the previous 12 months. Due to ongoing supply restrictions, there is currently no assurance that Nvidia will be able to turn all of those orders into actual sales. However, I think it's safe to conclude that Nvidia's growth will be far quicker than Wall Street analysts forecast, since they have continually underprojected Nvidia. Two analysts predict that Nvidia will make $287 billion on average next year, which is a 39% increase. Additionally, these analyst estimates serve as the foundation for forward earnings metrics. Additionally, the stock appears lower than its true value due to its undershooting of the revenue projection. For Nvidia, the range of analyst estimates is rather broad. At the low end, one analyst estimates $226 billion in sales. One analyst estimates $412 billion at the high end. If Nvidia can maintain its projected revenue growth rate of roughly 60% in 2025, it is projected to reach $331 billion. Nvidia would make $172 billion in profits if it could keep its 52% profit margin. That indicates that Nvidia is worth $4.75 trillion at its current price. That implies Nvidia's stock is currently trading for 28 times next year's earnings, which isn't a bad price to pay, considering its growth rate. I think this highlights that Nvidia's stock is actually a lot cheaper than the market thinks it is, especially if it can convert on its orders. Right now, Nvidia is a no-brainer purchase if it can. You may take advantage of all of the remaining upside in Nvidia's stock by purchasing now, since we'll probably hear more optimistic guidance on November 19th. Nokia Corporation has finalized a $1 billion share sale to Nvidia Corporation, giving the chipmaker a 2.9% ownership in the Finnish telecom business. 6.4 million new Nokia shares were issued at a price of $6.01 each as part of the agreement. On November 14th, these shares will start trading on the Nasdaq Helsinki. Nokia stated that it will withdraw from Euronext Paris and not list there as part of the strategy. This funding follows October's announcement and enhances collaboration between the two firms. The funding is meant to hasten Nokia's 5G and 6G research, enabling more AI-enabled and efficient networks. As part of the collaboration, Nokia will leverage ARKey Pro designs for its upcoming 5G and 6G products and include Nvidia's CUDA platform into its radio access network software. Additionally, the businesses intend to integrate Nvidia's AI-driven data center designs with Nokia's optical and switching capabilities. T-Mobile US is taking part in the AI RAN systems field trials, which are anticipated to begin in 2026. Nokia recently introduced the 7220 IXR switch, capable of handling 102.4 terabits per second, with profits from Nvidia supporting its campaign for trusted connectivity in the AI future. Investor excitement regarding its AI and 6G plan is reflected in the stock's more than 60% year-to-date increase. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
What is your takeaway as to the circular financing and whether this is a concern?
I think that there's clearly a lot happening, right? And the integration that we're having between the private markets as well as the public markets is clearly something to be watching. It's a space that we follow very, very closely. We think that actually what we've been seeing with OpenAI's relationships is the fact that they're broadening them. They're creating structures that are allowing them to potentially IPO long term. That's obviously something that's been talked about, I think, over the last couple of weeks especially. And what we're thinking when we look at these big companies, so we've got a few hectacorns that we watch very closely, and actually
Hectacorns.
Hectacorns.
Talk us through.
I'm pretty sure it's a term, over $100 billion. That's what we call them. We've got 3 of them in the data set that we track, over 12 actually decacorns that we also track really, really closely in our data sets. OpenAI, Anthropic, XAI. Naturally, right now, at their current implied valuations, they would rank in the top 30 if they were public and in our Bloomberg Benchmark AI Index, which has over 120 equities in it. So the scale of these companies is huge. The partnerships they are forming are critical. And we do think, we're not in the bubble camp, we do think that there's a lot of opportunity down the road as it relates to this.
When someone then sits at a dinner table with you at a cocktail party and they're saying, I cannot see it. Why on earth is AMD giving its stock to OpenAI to seal these sorts of deals? What is your general narrative as to why we can avoid some sort of bubble? Is it just the sheer revenue that could scale for OpenAI, but you do have to have a bit of belief?
Yeah, I think you do have to have a certain bit of belief, right? I think what we've seen is even over the last year, we've seen OpenAI's implied valuation more than double. Right? I mean, naturally, a lot has happened in that AI ecosystem. And actually, something that we've been really focused on, and Jensen actually said something the other day about this as well, is we're not just talking about where we are right now with AI. We're talking about an AI to quantum continuum, right? We're talking about this continued acceleration and where we're going to see and continue to prove it, right? So even if it's that you're thinking, okay, well, what if some costs come down, or what if the power needs come down? Well, the demand elasticity is just so strong that for every little bit of efficiency you gain, you're going to gain some extra demand that's going to drive a next new evolution. So we're really looking at this as a continuum, and investing through that type of disruption, I mean, it's not easy. It's not without tension. So while there's tons of opportunity, we are flagging, we've talked about this previously, about this potential tension that can come with that. In 2026, we're seeing over the last few weeks, we get a lot of pullbacks, right? We see a lot of optimism. What we're seeing is investors fear of missing out, right? Really wanting the innovation, but also every now and then pivoting to a risk off. And that tension is something that we think is going to persist through